Hey all, welcome to ShareTreck. This is Raj here, friends. This is my recording taking place at 18th of January at around 6:13 p.m. And I'm going to be talking to you about my impressions of the market, what happened today, and what's likely to happen tomorrow. We'll, as always, go through the key Magnificent 5 plus 2, as well as the indices and the VIX, heat map, as well as the fear and greed index, and most importantly, all our genomic shares in our watch list, and try and see what's happening out there. And if possible, we get some kind of a trade idea for tomorrow or an investment idea for tomorrow. With that said, let's get started. Welcome back, friends. We are going to start, as always, with the fear and greed index, which is at 66. So we have dialed down all the way from somewhere around 76 or 77, and we have been gradually coming down. This is a healthy kind of a situation that we are in, and there is still a little bit of animal spirits in the market, but not enough to chomp you down. So this looks good to me at this point of time. Look at the stock market heat map, and we look at the stock market heat map, and I'm going to just take out these ads from here. And if you look at it, the technology sector seemed to have attracted a whole lot of money. And the main losers have been real estate and utilities and healthcare plans. Those are the areas where we see wholesale loss of value. And there are some sectors in biotechnology which have not done very well, but they are all small in the component for the index. But among consumer defensive also, we are seeing a little bit of weakness in the household sector, as well as packaged food and tobacco and confectionery. So it's a mixed bag, but the big news for us is that money has gone into the Magnificent 7, that is 5 plus 2. I usually say Magnificent 5 plus 2, where the plus 2 is Apple and Tesla. So Apple has redeemed itself. Now they are going to sell the Apple watches without the oxygen sensing, whatever technology that is there. And they will be fine because an Apple Watch is an Apple Watch. Not everybody was asking for oxygen. It was a nice to have. So they can come up with their own technology at a later date, include it in a future Apple Watch. I think Apple is turning around. Also, another thing that seems to have happened in the market, it seems, is that as soon as we had the economic news and the Fed speak, there was a knee-jerk reaction, I think, which kind of impacted the bond yields. And as a result, money was sucked out of the stock market. Now it's coming back again. And that is a good game to be had. I think we had Mark Zuckerberg disclosing that he's put a lot of money on AI and they're buying NVIDIA chips and so on. So the semiconductor sector is also on a rise. And you will see NVIDIA was up 1.88%. And AMD was also up around 1.56%. So they're all doing very well. AI still is the buzzword. Cloud is still the buzzword. And so that's what I would say in the heat map in terms of my commentary. Next, I would like to go to the TradingView platform and look at the Nasdaq futures, which is looking very healthy because it's green and it is at 0.02%. The market is still open. It's around 6:18 p.m. on 18th of January. The futures is still mildly positive. I would take that any day rather than a mildly negative. And if you look at QQQ, it was up 1.42% during the day, and post-market it is still up 0.12%. So that's a good sign in my opinion. VIX is also come down by 4.59%. That's a good thing, but it's going to get support from the 50-day exponential moving average. Are we going to see it fall below that 50? That's the question. If it did fall below the 50, then we still have a lot of room because now if we zoom out and then look at our cup and handle target, it seems that we could still have a shot at 442.91. As well as we could still have a shot at 492.74. It may seem like a lot right now, but if you were to zoom out on QQQ and look at where we came from, right? At every point of time, it would have seemed that this is the peak and we can't go beyond this, but we have always managed to move upwards, and that will be the same story even now. And we could most probably have a cup and handle pattern, fructifying and giving us some cheer. That's a distinct possibility in my opinion. S&P 500 was up 0.89%, and it's got a resistance at 476.22 and it closed at 476.49. So it seems it has cleared this resistance and converted that into a support, which is again another major positive. And the next resistance for it is at 479.42. And our momentum is looking good, but MACD is not looking that great. I think the momentum will change the MACD, and I always believe more of the momentum than anything else. And then if you look at Dow Jones, it was up 0.56%. Momentum is still looking good, pointed the right direction. It will convert the MACD and we will have a better outcome for tomorrow. And US dollar index was up 0.05%. And if you look at IWM, Russell index, it was up 0.59%. Russell index is going to have a tough time going above 191.38, but it has a decent shot because the momentum is pointed the right direction, but it's below average. That's what is going to hold it back. Unfortunately, it has got a very bearish MACD as well. So that's going to be a problem for Russell index. US oil is up 0.05%. It's just been consolidating out here. It's a bearish pennant, and a bearish pennant always breaks downwards. I wouldn't say always. I'll say that predominantly breaks downwards. So chances of it coming down is much higher. And also the momentum here is flat. So I wouldn't worry too much about US oil spiking up or anything, unless there is a conflict in the Middle East or something of that sort, which escalates and creates some major incident. Then if we look at put call ratio, it has ended at 0.942. I would say that it's benign and slightly bearish. So neutral to bearish is what I would say. And if we look at the number of S&P 500 companies which are above their 50-day average, there has been a slight improvement out there. We went up by around 2.27% and it ended at 71.76%. So a little bit of support, but I think it's starting to wane a little bit. If you look at the past patterns of how these things work, you go up, you touch this line, and then you start coming down, and at some point of time you take a decisive turn. So whenever it has come down significantly before going up, except in these small areas where it has been consolidating. I'm not seeing this as a consolidation pattern as yet, but in the next week or so, if we see a consolidation pattern out here, then we can't rule out the possibility that this may go up again. Otherwise, it's got to come down, and maybe somewhere out here is the earliest, somewhere around 39.88% is where it's likely to bounce back. With that said, I'm going to go and look at the major stocks that move the index, which is the Magnificent 5 plus 2. We have NVIDIA, which was up 1.88%, and everything is overbought, super strong chart. RSI is also overbought, and therefore RSI is going to be a constraint. However, if you look at this red line that I've drawn before, in the past, RSI had gone all the way up to around 77.63% before coming down. So I wouldn't rule out the possibility that NVIDIA can go up further until it reaches this red line, which is 76.55. Sorry, let me just come back here again. And yeah, so it was 88.91. So it can go all the way up to 88.91. RSI can go all the way up to 88.91 before it starts coming down. So I wouldn't rule out further improvements in NVIDIA price or even consolidation. And if it did decide to turn around like it had done before, then I would see a little bit of consolidation, little bit of profit taking, and the 9-day exponential moving average can provide a support. And then we are looking at Netflix, which was up 1.04%. Chart is looking good for Netflix for tomorrow. And Meta is up 2.11%. And RSI is overbought. MACD is also bullish. But with all the statements that Mark Zuckerberg has made about investing in AI, I think Meta will get a little bit of more tailwind for tomorrow. Tesla is down minus 1.70%. And there's an activist investor who is talking Disney. And we have Carl Icahn at Illumina. I think what's happening in Tesla is Illumina level of stuff. So we need an activist investor getting into Tesla to have a look at what the heck is happening out there, because a lot of extraneous factors are hitting Tesla. And I think a CEO should have 100% attention on Tesla in order to justify 25% of shares and control and a huge salary. That's what is needed for Tesla, and that's how Tesla can get its worth from a CEO. I still hold the shares. I'm hopeful that activist investor might come in and do something. And then we have Microsoft, which was up 1.13%. Again, a solid company. It has got the RSI above the overbought area. And I'm going to draw a line here, just like we did for NVIDIA. And this is I'm going to mark it red. This is a resistance for the RSI. It's at 78.89. So in theory, Microsoft could go all the way up to 78.89 before falling, or tomorrow it could turn around and consolidate. MACD is looking super bullish at this point of time. Everything is looking good for Microsoft. And then we have FNGU, one of my favorites, and it's bounced back handsomely with a gain of $9, which is around 4%. And MACD is crossing over to the signal line to the bullish side. And momentum is above average and pointed upwards, which is what I like to see. So FNGU is looking good for tomorrow. Apple was up 3.26%, but it has dropped post-market. And Google was up 1.47%, and it's up post-market. And Amazon was up 1.18%, and it's down minus 0.05 post-market. Let us quickly look at FNGU and see where it is post-market. In post-market also, it's up 0.15. So it's all looking good, my friends. Now let's go on to look at genomics. And in genomics, we have IMTX. It's the very first one. It's up 1.25%. Yeah, the MACD is turning over to the signal line, trying to get into the bearish side. But fortunately for us, today, the momentum has turned and started pointing upwards, and it's still above average. So IMTX can still do better tomorrow. DNA was up 2.61%. It's a dead cat bounce, as I predicted yesterday, friends. If you look at this chart out here, you will see yesterday I said that it has bounced on this support, and it could be a dead cat bounce because there'll be bottom fishers coming up and buying out here. And typically when you have a support line, that's where people are doing options trading, and therefore that's how the supports get formed. There are puts and calls which restrict the share on upside and downside. So something similar has happened, and this is not durable. We have a jump in momentum out here, but it's still very weak. And MACD started moving towards the signal line. I don't think this is sustainable. We'll have to see for prolonged bounce. Then that would be something that can give us some confidence. PACBM was up 4.09%. And again, it has bounced off the 30% limit. It was oversold, so it has bounced back again. I don't think there is anything special about PACBM. Let us see if there was any news. No, I don't have any boosting news out here. Editas was down 2.85%, and in the process it has converted the support at 8.83 into a resistance, and momentum as well as MACD is bearish, so chart is not looking good. BNGO was down minus 0.81%, and it has gone below the support of 1.25, so I'm going to mark this as red. So BNGO has become even more weak. CRISPR Therapeutics has managed to eke out a meager 0.20% gain, and it has stayed above this diagonal line of support, so that is one positive thing I can see here. And if I was to look at the 50-day exponential moving average, it's at 61.01. So CRISPR Therapeutics has been held back by that 50-day exponential moving average. Hopefully we are able to break through that tomorrow. Momentum is below average, so that's a concern for me. But I can see that it's slightly upward, I mean mildly. So I'm going to look for all possible hopes out here. One of the subscribers asked me, despite good news of TDT approval, why is CRISPR still going down? So my main message is that when we have a volatile market, where we have economic news like consumer price index or producer price index or stuff like that, which are or employment levels which come in strong, we are going to find that the investors in the market are going to think that the Fed is going to delay any rate cuts. So right now we have priced 6 rate cuts for this year, and Fed has been talking about 3. So if we wanted to have 6 rate cuts, our first test is going to be in March. So if by March there is no rate cut, that means we may not have 6 rate cuts. And then probably the market might say we may not have 6 rate cuts, but the percentage basis points of cuts will be the same, but divided into 5 instead of 6. So markets could take those kind of positions. And whenever the Fed is expected to become hawkish, which is good economic news like strong employment, low unemployment level, or higher consumer price index than expected, those kind of news means that the Fed cannot ease in its policy, the Fed cannot cut rates. So whenever those kind of strong events happen, then what happens in the market is that the bonds start losing value so that the returns on it or the yields on it can be higher. So when that happens, bonds become more attractive and less risky for investors. So they move money out of riskier stocks. And genomics here is a prime example of risky stocks because we have cutting edge technology and we have a whole lot of companies with weak balance sheets. So as a sector, they are high risk. And also any therapy in the clinical trial can fail anytime and can be junked. And all the money invested in that is gone. So as a result of that, all these new technologies where there are a lot of companies which still don't have any revenue but are still investing in R&D, waiting to bring a product out, they are all high risk. So high risk stocks are going to suffer the most in those situations. And as interest rates start coming down, the market value of the bonds will go up, as a result of which anyone who buys the bonds gets lesser returns, and that returns are hypothetically equal to the interest rate. So that's how you have to understand the impact that the yields have on genomic stocks. I hope this helps. And if anybody else has a better way of explaining that, put it in the comments so that everyone can understand that. Now, next we are coming on to NVDA, which was down 6.25%, and chart is looking very weak. It's going to go down further. Beam was down 2.78%, and again, MACD and everything is weak, and we have support of 25.10, which has been converted into a resistance, and we have NTLA down 1.94%. Both MACD and momentum are looking weak. ARKG was down minus 0.48%. It still has got support here at 28.02. Momentum is kind of stabilized, but it's still below average. We have to see what it does tomorrow. Prime was down minus 6.03%. And it has got to bounce back. Again, a dead cat bounce back, just like PACB. Tomorrow, Prime could bounce back because bottom fishers will buy and expect a jump. That's what you can see out here. And then we have Bluebird, which was down 1.42%. It is still consolidating at the bottom. And all the extra equities that have been issued are what is holding down the share. Over a period of time, it will start improving. Maybe around Q2, when we start seeing more and more of its earnings potential, that's when we'll see. And in some areas I have read that more and more M&A activities are happening in the biotech sector. So some of our companies in our watch list could also be targets for a takeover because they may have a really good technology, but they don't have money. And Bluebird, I think, would be one of those prime cases where, because Bluebird doesn't have anything in its pipeline. Let me just go and quickly check. So let us look at the Bluebird pipeline. So it has got Lovocell, that's all. And phase 3, SCD, HGB, SCD, HGB. So I think they already got the approval. This is, I don't see anything new in their pipeline. So they are just now marketing just manufacturing and marketing all the therapies that they have created. Unless we see new candidates out here, I would look at Bluebird as an asset which a big pharma can acquire, and they get 4 gene therapies which are high priced, and with the synergies that the big pharma can have by acquiring Blue cheap, I think they would be able to justify being very competitive against CRISPR in the SCD and TDT field. That's what I'm thinking. Let us see what happens. If any rumor of that comes in, you can immediately see the shares jump all the way. I think they can go all the way up to $3 if there is any rumor of a big biotech taking over Bluebird. This is my speculation, my personal opinion. I don't have any facts to back it. This is just speculation. So friends, this is not financial advice. So please do your own due diligence. That said, VERV was down minus 0.48%. Illumina was up 0.51%. Post-market also it's up 0.10%. And we have momentum, which is above average and pointed in the right direction. So it's looking mildly positive out here. And MACD, I think, should start responding soon. It will take a longer period of time for MACD to respond because momentum is not picking up sharply. It is picking up gradually. So it will take some time, but I think Illumina is on the mend. So there's been a bit of consolidation out here. Another way of looking at this could be to draw a trend line and see what it looks like. So this is one trend line here, and I'm going to pick up another trend line from here and put it together. So I've come up with this trend line here, which is my best attempt to make a wedge. So it's a bullish pennant out here, and it has to break out on the upside. That's what I would say. That's what we should look forward to. Caribou Biosciences was down 3.46%. And the MACD also is looking weak, and the momentum is also looking weak. There is a little glimmer of hope because the momentum is pointed upward, but it's still below average. So tomorrow there's a good chance that it may come above average, in which case Caribou can convert its MACD to bullish, and that could be a good chance. But if the sentiment turns tomorrow in the market, then all bets are off. Allogene was up 1.59%, and the chart is still looking good for Allogene. The 9-day exponential moving average has provided support, so that's why it is out here. So with that said, my friends, that brings me to an end of today's video. And I was very heartened to see the move in the market. And I think that one of the lessons that I have learned is that be patient when you don't know what's happening, don't do anything. That's exactly what I have done with FNGU. Mentally, I'm reconciled with the fact that all the stocks that I have already invested, especially the tech ones, I'm not selling any of them. I'm just holding them for a future date. And it's going to be long term. And also CRISPR, I'm holding it for a longer period of time. And whatever I had to sell, I've already sold. So I'm just going to sit and watch what happens in the market. If the market goes up, I have plenty of investments already in place that can start gathering the gain. But if the market goes down, I have cash left in hand because I sold 100 FNGU yesterday, earlier. So I still have money for the other half. So I'll start buying when it goes down and wait for it to come back up again. Because at the end of the day, AI and cloud are going to rule the next 5 or 6 years at least in the market. And regardless of whatever happens with the inflation and employment and other things, sooner rather than later, the market is going to mend. And that may take a year or so, but we are looking at a long-term situation. I'm not doing day trading, looking at a long-term situation. So I'm happy with all the companies that I'm invested in. So with that said, my friends, I would like to bring this video to an end, and I want to hear your opinion because, as I said before, I'm just a regular investor but with a YouTube channel so that I can show you what I'm thinking and how I'm looking at the stocks. The idea is that you also tell me what you're thinking, what is your strategy, so that we can all share our mind, and our comment section can be a place where we exchange ideas. So please don't hold back. Drop your comments. Thanks and have a great day. Bye for now.